the main reason I think is that gold is the anti-debt, anti-dollar, or anti-fiat currency. And I think what it's telling us is that we're going to see a lot more QE and money printing because things we're getting to a point where that's the problem with fiat currency. As I said earlier, the example in France, and I think silver is really the bankers' kryptonite because they don't like silver because silver has been money of the people for thousands of years, and where does silver really get out of control?
Gold has continued its impressive rise beyond $3,100 per ounce in early 2025, driven by strong demand from private investors and central banks. Mario Innecco highlights that central banks in countries such as China, Russia, India, and Turkey have aggressively increased their gold purchases, surpassing 1,000 tons in 2024 for the third consecutive year. This trend is part of a broader de-dollarization strategy, where nations seek to reduce their reliance on the US dollar by accumulating tangible assets like gold. However, alongside this surge in gold's value, there are growing concerns about the transparency of US gold reserves. Former President Trump and Elon Musk have raised questions regarding the actual state of the US's reported almost 5,000 tons of gold. Some analysts, including Innecco, suggest that parts of these reserves may have been leased or even sold off, raising doubts about the integrity of the U.S. gold stockpile. The lack of clarity around the true status of these reserves has sparked calls for a full audit, with implications for global confidence in the U.S. dollar. If confidence in Western gold reserves continues to erode, it could prompt a shift away from dollar-denominated assets, accelerating the adoption of gold and other tangible reserves. This, in turn, could trigger significant volatility in global currency markets and further intensify the drive for de-dollarization. While gold continues to steal the spotlight, silver also shows notable strength, experiencing its highest weekly close since 2012. Mario Innecco points out that major financial institutions still hold substantial short positions in silver, creating the potential for a short squeeze if demand continues to rise. This increased demand is partly fueled by silver's growing role in high-tech industries, particularly in renewable energy and semiconductor production, making it an increasingly valuable asset. If silver's momentum persists, it will signal a broader shift in global monetary dynamics, reinforcing the appeal of tangible assets like gold and silver as safe haven investments in times of rising economic uncertainty. Thanks for watching. We present the clips of Mario's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, I mean, last year it did really well as well. I think it was up 26% in dollars. I think it's because, well, technically, since 2011 up until early last year, it was basically consolidating. There was a big resistance around 2,000 or just above 2,000. And once we broke 2,100 last year, it really took off. But the main reason I think is that gold is the anti-debt, anti-dollar, or anti-fiat currency. And I think what it's telling us is that we're going to see a lot more QE and money printing because we're getting to a point where that's the problem with fiat currency. As I said earlier, the example in France, it's like a drug. You have to get more and more to have the same effect. I think people are finally waking up. The other thing that I think is helping gold is that the people buying gold are not like hedge funds or speculators who bet on the price of gold. It's sovereign countries who don't care about the price, but they want physical gold. And they've been chipping away at the physical supplies of gold in the West. And I think, earlier this year in January, January 29th, the FT reported basically that the Bank of England and their LBMA mechanism was basically in default. uh, 4 to 8 weeks to wait for spot delivery of physical gold. And and then you have also this story about all the physical gold flowing to the US, like over 2,000 tons. Who is buying all that gold? Could it be the US is repatriating it? It's possible because I mean, me and other people like GATA, Bill Murphy, they've been telling people that the US has been leasing all its gold through in the last 30, 40 years. And if they have to reorganize the system and sit down with the Russians, the Chinese, and the Europeans, you need to have gold to sit at the table. And if your gold is in London and other places, the people sitting with you, they'll know that. So I think that's the way I see it. Yeah, I think silver hasn't been part of the central bank buying of metals because it's not really. Yes, I think it's only the Russian central bank that might be holding some silver and the finance ministry. But other than that, it's more of an industrial metal. I mean, it's a monetary metal, and I have silver coins and bars. Today is silver squeeze. But and I think the weakness in the markets maybe hurt silver a little bit in the general markets, but silver is still outperforming gold this year. Maybe it's pretty much the same because of what's happening today. But and I think silver is really the bankers' kryptonite because yeah, they don't like silver because silver has been money of the people for thousands of years. And where does silver really get out of control? I think a lot of the banks would be in trouble. But I spoke, I think, yesterday in my live stream that last week silver closed at the highest weekly close since 2012. So I think it's only a matter of time until silver overtakes gold. I'm not saying you should sell your gold and buy silver. I have both. So, but I think it's patience, Kai. You just need to be patient with silver. And when it's ready, it will go. I think also I mean, I follow a little bit, but all the LBMA and the COMEX numbers, but apparently a lot of the silver is flowing out of the LBMA. And I was reading David Jensen's report about Robert Gottlieb, who used to be a bullion banker for HSBC and JP Morgan. And he actually admitted in his latest post on X that he's concerned because he said a lot of he calls them swap dealers, but they're bullion banks. He said they're massively short silver. And I think they're trying desperately to cover without driving the price higher. In the 19th century, we didn't have any system. It was organic. People used gold, and they had some kind of agreement on the purity of the coins. But yeah, it's been a 20th century thing about having global systems. And yeah, I wish we won't have a new Bretton Woods system. I wish the governments would allow the free markets and the rule of law to decide what people want to use for money. And I think gold and silver would be chosen by the markets. But yeah, Scott Bessent spoke about it in an interview before the U.S. elections. He said he feels we are on the cusp of Bretton Woods-like realignment. So what it would look like, I guess, is the major countries, as I said earlier, sitting down to rearrange some kind of system. But I think gold would be at the center of the system in that it would be the major reserve asset for the whole world. And the reason I say that is because gold is apolitical. Gold doesn't inflate, doesn't lie, doesn't default. And I think that's what would be good for the world, for people from different nations to trade and invest in basically a currency or their own currencies backed by gold. But of course, it's always nothing's always perfect because humans are fallible, and you would have one country maybe printing too much and not having enough gold. As for a unit, I'm not sure. I think they're trying to push for the digital currencies, but yeah, I think it would be very hard to have a one world currency. My guess is that we'll have several currencies like we have now, but gold will play a much more important part of the system.
In the context of global debt and the rising possibility of recession, Mario Innecco highlights how the debt burden, especially in developed countries, is growing increasingly unsustainable. As governments continue spending sprees, it seems more likely that the only way to address this massive debt is through either default or hyperinflation. The current trajectory suggests that the US is leaning toward the latter, as central bankers and politicians are inclined to avoid deflation at all costs, fearing its impact on their ability to stay in power. The consequences of such actions would likely lead to significant instability in global currencies, with the US dollar still holding its ground for now, at risk of being devalued in the long term. This instability creates an environment where investors and individuals are flocking to tangible assets like gold, which has been seeing an upward surge in value. Gold prices have recently climbed by nearly 28%, reflecting the growing demand for a safe haven in uncertain times. Gold's role as a store of value has never been more evident, and its recent performance mirrors the broader market unease. As governments struggle to manage their ballooning debt and financial markets remain volatile, gold remains a reliable hedge. Its appeal as an asset that retains value during periods of hyperinflation or economic downturn is clear. For many, gold represents an insurance policy against the potential fallout from the looming debt crisis, offering a tangible and enduring form of security amidst the turbulence of global finance.
I think the monetary and fiscal policy led is the root of all the problems. But like if you look at it less in more detail, I think the U.S. stock market, the market capitalization to GDP was around 208%, and that's what Warren Buffett has been using as an indicator. And I think it's just been overvalued, and now people are suddenly realizing it. And is it a surprise that he's got 334 billion or so in cash or short-term T-bills? Japan as well. I think, I've been saying for the last few years that the bond bull market we had since 1981 to 2020 is over. And Japan, of course, the BOJ, they've always tried to keep interest rates and bond yields as low as possible because they have a huge amount of debt. And they've dug themselves so deep into debt. And the JGB market is more than half owned by Japanese. But now we're starting to see they can't stop the cycles. We're starting to see the yields in Japan go up. And I think that's what's causing troubles as well. So yeah, the fundamentals are there for a correction. I think it's very easy to use that excuse of the tariffs and the Trump administration. But maybe they do want to see some kind of shakeout because people like Besant and Trump have mentioned that the top 10% of Americans do most of the consumption, and that the average Joe and Jane, they've been left behind. And and I agree. I think the wealth inequality, not just in the U.S. but in the U.K. and Europe, is a result of the Cantillon effect. The people at the top, they can protect themselves from the money printing, and that's why we're seeing this, in my opinion. As for triggers, one could actually argue it was maybe when China announced DeepSeek, I don't know, 6 weeks ago or so, many people thought, wow, that's going to be the top for NVIDIA and the Magnificent Seven. So, I mean, at the time, everyone was saying, oh, that's going to be a top for the markets. But now everyone's focusing on the tariffs. But I think it was Margaret Thatcher who said once, someone asked her about why is this happening now? And she said, well, it's just time. It's just cycles. Sometimes we try to find reasons for everything. I think the only way to reduce the debt is a default, and it can be done through hyperinflation, which I think is the most likely scenario, or by default, which some people think, the U.S. has never defaulted, but that's not true. They defaulted on the Liberty bonds back in 1933. They were supposed to be paid in gold, and Roosevelt banned gold bonds and gold for that matter. Nixon, that was a default on August 15th, 1971. So technically, the U.S. is still in default because Nixon suspended the payment of gold. That's what convertibility is paying the currency. You bring the currency to the bank and they give you the money, the gold. He suspended it temporarily and we're still, so I don't see, the only way out is default or hyperinflation. And I think it's the reason why I think it's going to end up in hyperinflation is because politicians and central bankers, they don't like deflation because they don't get elected. So I think they're going to keep stimulating monetarily and fiscally until one day people wake up and say, wow, this is never going to stop. And that's when the hyperinflation starts. And hyperinflation has not even got anything to do with cost push inflation. And it's everything to do psychologically. People want to get rid of the currency as quickly as possible for anything of value.
Gold is set to continue its upward trajectory in 2025, with significant potential for price gains as the market reacts to ongoing global challenges. The persistent economic strains, including rising U.S. deficits and inflation, will likely push gold even higher, offering a secure hedge in uncertain times. With government layoffs in the U.S. potentially affecting economic growth, interest rates may remain lower, creating an ideal environment for gold to flourish. While some might speculate that geopolitical developments like a ceasefire in Ukraine could soften prices, the reality is that renewed conflicts, whether in the Middle East or heightened tensions with China, would only strengthen gold's appeal. Historically, gold has outpaced inflation over the long term, ensuring its status as a reliable store of value, with returns set to exceed the modest yields from cash. As investors look for solid, tangible assets, gold will continue to be a cornerstone of a portfolio, especially as it offers protection against market volatility, making it an essential asset for those seeking robust returns in the coming years. That's it for today. Share your thoughts on Mario's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.